Hello guys, welcome to the new video. It's in a summary video for the last week, which the trades which I had taken, and I'll be explaining you the logic and the setup that I looked after for taking all those trades, and even I'll be explaining you about the risk reward ratio that I looked after for entering the trades. So coming to starting from the day Monday from the 30th of October. So initially, like before moving, I will show you like the I'll move on to 15 minutes time frame so that you'll understand the logic over here for me taking the trades either on the put side or the call side. What was the logic? First of all, the thing is we need to understand the trend of the market over here. I usually follow the 200 moving average, the one which I use on 5 minute time frame basis and even on the 15-minute time frame and 5 minute time frame basis. So coming to the logic, before moving over here, if you see this is a 200 moving average on a 15-minute time frame basis. If you observe here, the Nifty is in the downtrend over here, and even the 200 moving average is following over here, especially observe from this zone till this zone wherein Nifty tried to bounce back over here. So the 200 moving average, wherein the Nifty is well below the 200 moving average. So this identifies, like, what signifies from this setup is that the Nifty is in the downtrend unless and until this 200 moving average becomes either flattish or on a slight upward direction. I'll try to think of taking the either shorting the puts or buying the call option. Or over here, if you see the moreover, let me clear this. Whenever the Nifty is trying to come near this 200 moving average, there we've seen a crackdown on a smaller time frame basis. Even here, you see the Nifty opened over here almost near to that we saw, and even at this instance, we saw that there was a retracement in the Nifty, and then we saw a retracement. Nifty came over here, and then on Friday, if you see, we see a gap up above that, and Nifty is in the sideways zone over here. So that's how I look after, eventually. So before moving to the setup, I'll go on to daily time frame basis, that I will tell you the logic over here. So the important thing over here, if Nifty, what has happened here, if you observe, especially observe this zone over here, Nifty had made four continuous gap ups, and the candles were very huge with lower shadows as well. So we had seen here there were gaps over here at this point. There was a gap, and the next day the Nifty opened gap up, and there was a gap zone. Similarly, basis, if you see, there is a gap zone between these two candles. And what has happened usually whenever the Nifty takes such a huge breakouts and there were a lot of gaps, Nifty usually comes in not exactly at that time, or maybe in the upcoming days or in the upcoming months it will try to do that. So if you observe over here, this gap zone wherein the Nifty over here retraced and Nifty took support exactly over there. From there it bounced till 20,000 levels, and now here, if you see, there was a huge crackdown irrespective of the level. And if you observe here, this is the candle wherein the there was a gap zone at this point. Nifty has consolidated almost over there in this zone itself. And similar basis, if you come here, the Nifty has come exactly in between this zone, the wherein I have marked this line over here, one at the top and the one over here. So Nifty is in this zone now. Either once the Nifty gives a breakout about 19,250 and sustains over there for, like, as it has done on Friday. So in the upcoming days we might see a pullback till 90,400, 90,350 to 400 levels. That's what suggest over here. So even though if we see any minor gap downs or retracement till toward 90,230 to 90,250, we can think of buying with a stop loss of 19,200 in the upcoming weeks. So moving ahead with the trade setup that I looked after. Now overall the picture is clear that the Nifty was in the downtrend, hence I was thinking of shorting or on a retracement. That was my motto behind the trades. And I usually follow the 200 moving average on the 5 minute time frame basis. On Monday, if you see, there was a zone wherein Nifty had created on Friday. This is the zone wherein, like, let me draw this zone over here. If you see, the Nifty had taken a lot of resistance at exactly around 90,100 level, around 90,090 to 90,100 on Friday itself. And then there was a resistance over here at this first point wherein Nifty wanted to take out this level, but after that we saw there were a couple of instances, there were a lot of resistance at this point. And Monday morning, on Friday we had some Reliance results and all, hence we had an impact on the Nifty along, because Nifty was in sorry, Reliance was in positivity of like around 40 points. So with that aspect, I waited for the first candle to form, and then I saw Nifty taking resistance over here, and usually there was a bottom wick as well. So I entered in this candle, shorting the, I bought around 19,100, and I exited at this candle itself. In the first candle, around in couple of candles, I got the huge momentum and I exited. So over here, the setup was a resistance that had formed over here on the Friday, and along with I had a confluence of 200 moving average. So usually on a downtrend to the flattish side, wherein the Nifty is trying to take a resistance, I usually they take this as one of the setup wherein I short with respect to this one. So I was able to gain around with this profit, a huge, not that huge profit, but the trade was very quick with respect to the setup. So that was the logic for the Monday trade setup which I had taken on the. And as I said you, on the daily time frame basis, there is a gap zone which had created because of the Nifty opening gap upon 4 continuous days. So this was a zone wherein 19,250 on the higher side and 19,200 on the lower side. So Nifty opened exactly in between around 19,240 or 230 odd levels, and then in the first candle itself, if you see, there was a huge sell-off. And then what I did is, after sell-off, I waited for this green candle to be formed over here. I entered in this green candle on with 19,150 put, and I exited along this line over here with this couple of candle formation after that. So the logic was pretty similar over here. 200 moving average was on the downside and Nifty had broken out. But the main important thing I checked out was these two resistance levels, wherein Nifty opened here, and then the first candle itself we saw a huge crackdown. And with that aspect, I entered in the green candle. Why green candle? Because the people who would have shorted over here, they will be booking the profit, and hence this candle was formation formed. That's what was the logic behind the trade for this one. So with this trade also was quick, and my risk to reward ratio was also pretty much lesser over here. If you see, I entered around 19,170, and my stop loss was around 19,200. So around 20 points was stop loss around on a spot basis I'm talking about. So, and I gained around the, target was around 90,000 to 110 to 120 odd levels with respect to the support zone over here that had formed. The usual trade setup would have been in this would have been the target, wherein the zone wherein I was talking about the Friday and the Monday setup. The similar basis, if you see, Nifty broke out and took a support over here, wherein, and then we saw a rally over here. And in the similar basis, after retracement, we saw the similar one which was acting as a resistance over here, acted as a support at this point, like consecutive points over here. I'm just extending this zone over here. So the similar basis, the same setup you can use with this aspect. Me being entering at this point, my usual target would have been this point, this zone around 19,100. But however, there was like sideways zone, and even I didn't wanted to wait for such long because of the Nifty had already corrected so much, and then the scandal had entered. So with that aspect, that was the trade setup for the Tuesday as well. And on Wednesday, if you see the first morning itself, the candle wherein the Nifty again, if you observe the 200 moving average, usually like the trades that I take has confluence of 200 moving average on a regular basis more often. But over here, if you see, there was a consolidation and the similar zone wherein if I extend this zone, the same zones wherein the Nifty was trying to take resistance and the support over here, and we had a resistance of 200 moving average. So with that aspect, I entered in this trade, and I was able to capture a good trade with this setup. That was the logic for this trade. And on Thursday, the trade was not that great because I anticipated the same setup that I had formed on Wednesday. With that aspect, I entered over here, but the premium was not that increasing. I was able to gain around 1,000 rupees profit from the trade because of the expiry. The premium was not that much increasing, because if you observe, the Nifty was in almost sideways zone for like 1 hour, 1.5 hour ORA. So because of that, the premium increment was not there as being expiry day. And on Friday, the trade setup was pretty similar with respect to the resistance zone that I talked on a daily time frame basis. So if you observe 19,250 being the resistance zone, and then I entered almost in this zone at somewhere itself, and then I exited from this trade in the first early morning session itself. And in the later half also, I entered somewhere in this zone in the monthly expiry of 19,300, and I gained around 1,000 profit over a similar basis. And on the Friday, we had a zone being formed in the Nifty, wherein Nifty was trying to take around 19,233 as a support zone on multiple occasions. Here in the first candle we had seen a lot of similar aspects have been formed in the during the daytime. So henceforth in the coming week, the 19,200 to 233, around 250 zones would be the best buying zone to enter, on a long side being Nifty taking a lot of support, and there was a almost a sideways zone on a Friday basis. If you observe, hardly on the higher side, Nifty went on to 270 odd levels, and on the low side, it was around 208. So the important thing is, like, around if you get around 230 to 220 odd levels, that would be a buying zone, and our stop loss would be somewhere around below 19,200 levels. So, like, better if we get near the this zone, that would be a great trade setup. So to on the going on the longer side and on the long side. So from the last week, I was able to make around 20,000, 21,000 as overall profit for being trading 5 days, and the risk that I had taken was very negligible with respect to the setup that I formed. I identified during the sessions. So I'll be updating you about the trades that I'll be taking in the next week, and I hope you like the video, and thank you for watching this video.